All right, everyone, let's get going. Thank you for your patience. Today's webinar is Beginner's Blueprint to Homestyle Lending. If at any point in time you have questions, please email them to us directly at webinars@remn.com. My name is Steve Rosetta. I'm the Renovation Lending Manager here at REMN Wholesale, and today I will be your presenter. So without further delay, let's get started. Today's agenda will be talking about the Fannie Mae HomeStyle product, specifically what makes it a benefit to you, your real estate agents, contractors, and your borrowers. We'll also talk about the process flow of the file. How do you start a file and how do you close a file? We'll talk about the math behind determining the loan amount. And then we'll talk about some HomeStyle specifics. We'll get into the nitty-gritty of what you can do with a HomeStyle. And we'll also talk about, lastly, how to get started on your very first HomeStyle. So let's dive into what exactly is a Fannie Mae HomeStyle. Well, first and foremost, it's a renovation loan, just like a 203K or a VA reno. It's just another type of renovation loan. So if you look at our graphic at the top part of the page, we have a purchase price or a payoff. So that means we can do this on a purchase or a refi, plus the renovation costs, do one single closing on one single mortgage with one single payment. So this is contrary to your traditional two closings with additional fees. With one single mortgage and one single closing, we're saving on those extra fees of a separate closing. We are baking in the renovation costs into the mortgage. What's different about a Fannie Mae HomeStyle is that we're basing our lending limit on the as completed or after completed appraised value. This is contrary to your standard loans where you're getting only an as-is value. On a renovation loan, the work begins after closing. So you will process this loan, get paid, the real estate agent will get paid, and then the work starts. The contractor has 6 months to complete the work. Once the loan closes, REMN Wholesale has a department here that will handhold your borrowers, contractors, and HUD consultants on the contractor draws. Okay? The thing you need to know about renovation loans, and specifically the Fannie Mae HomeStyle, is that you're going to deal with the same income, asset, and credit underwriting that you do on a normal conventional loan. So you're already familiar with most of the conditions. The only new things that you need to learn are the new reno conditions. Between myself, your AE, and the rest of the staff here at REMN Wholesale, we will help you get accustomed to those new reno conditions. So let's talk about some of the advantages of a HomeStyle loan. Well, like I mentioned before, you have one single monthly payment. You can finance in up to 6 months mortgage payments during renovations. So if it's determined that the home is uninhabitable during renovations, well, your borrower doesn't need to pay rent to live somewhere else and a mortgage at the same time. We can roll in those mortgage payments so that your borrower is not burdened with 2 payments. With a renovation loan, your cash is not tied up. You can use it for other investments. Traditionally, a lot of homeowners would use their cash reserves to pay for renovations. Not in this case. We can finance those renovations and they can use their cash elsewhere. The loan amount is based on ARV, or after repaired value, subject to value, after completed value. They all mean the same thing. Traditionally, on a cash out or a home equity loan, you're only limited to the current value of the home. But if we can use after improved value, we increase the lending limit a lot more. So you can borrow a lot more with a renovation loan. We have competitive Fannie Mae rates, so they're not far off than your traditional Fannie Mae rates. Whereas on a hard money loan, personal loan, or credit card, you're dealing with much higher interest rates, and you're also dealing with much shorter terms. On a Fannie Mae HomeStyle, you can finance in, let's call it $150K worth of work over 30 years. That's great. You can't do that on these other types of loans. So let's talk about the status of the industry. Well, currently, spending on home renovations reached a record in 2018. That's huge. And it's only up from 2017. And all the studies and surveys that I've read only predicts this trend to increase. So we really want you guys to capitalize on that. Part of the reason for this increase in renovations among the consumers in this country is HGTV. You can leave this show on or this channel on in the background, watch Fixer Upper with Chip and Joanna or Flip or Flop for hours, right? So what we're doing with HGTV is empowering people to do renovations on homes that they already live in and renovate instead of move. The slogan we use here is improve, don't move. So one statistic that jumps out at me is the average age of U.S. homes is 40 plus years old. That means that a lot of homeowners are going into these new homes and they want to renovate, right? They don't want their parents' kitchen or their parents' bathroom. They want to renovate. So again, we want you guys to be there to capitalize on that. There is a lack of affordable new housing inventory out there, and people are moving less. So they are improving. They're finding ways to improve versus move, right? Your family size grows. Why not just expand your current house versus, purchasing a new, bigger one? So now let's dive into the benefits for all parties. Well, we have the borrowers, real estate agents, contractors, and you guys, the mortgage brokers. Let's talk about the borrowers first. Well, first and foremost, they can add value or build equity to a home. So let's say they put in $50,000 worth of work and they get back $100,000 in value. Well, great. They just built instant equity. They built an instant $50,000 worth of equity. And maybe they're looking to buy a home in a certain neighborhood that they like, but there's no homes available, only fixer-uppers. So what they can do is live in the neighborhood that they like and make the home of their dreams. It might not be perfect now, but envision it once all the renovations are done. So they can make the home of their dreams with a HomeStyle. Real estate agents, if you market these fixer-upper properties with the potential, showing the potential, we have, prospective home buyers coming in during showings, and we show them what the kitchen could be, or what the new siding and new paint and new landscaping could make the curb appeal, right? So we have to show these prospective buyers what the home could be and that they can turn it into a dream home. And when we do that, they're quicker to pull the trigger on wanting that home. So we can then move homes faster. So that's the benefit for your real estate agents. For your contractors, we're allowing them to give their clients access to more funds. They might do 10 bids in a week, and 9 of those borrowers can't afford the renovations. Well, have that contractor send that client to you, and you can help them out with the financing, and you can get them the money through after improved value. Okay, so we're helping contractors out as well. And with a Reno loan or a HomeStyle loan, the money is set aside for the contractor. So there's no doubt in the contractor's mind that they will get paid as long as they complete the work. They will get paid. This doesn't happen when it's just an agreement between the contractor and the homeowner. Sometimes the homeowner won't pay them, right? With a rental loan, that's not an issue. And again, they'll get increased referrals if the job is well done. The real estate agent or the mortgage broker might refer them a job, and vice versa. If the contractor gets someone who needs some money, they'll send it your way, mortgage broker. So let's talk about mortgage brokers. This is just another opportunity to differentiate yourself, right? So I see all the time, there's markets out there without a Reno person, without someone who's a go-to rental person. Why don't you become that person in your market? You can get a lot of loans. This is a great product to fix those common appraisal issues. We all know it. We get an appraisal back and there's 10 items that need to be fixed, and we can't do a simple repair escrow. Well, now you have a solution. You're using the Fannie Mae HomeStyle, and you are able to finance in those repairs and get the deal moving. With increased renovations comes an increased loan amount and also an increased commission. So that's an added benefit to you guys as well. If you're doing a purchase, you may have the opportunity to do a second refinance loan at a lower rate after the work is done. So for you mortgage brokers out there, there's the possibility of getting 2 lender paid commissions here. That's huge. And lastly, you can get increased referrals if you do a good job. Your real estate agents, your contractors, and your borrowers will all start referring you Reno deals. Let's talk about getting that first deal and just getting in the rhythm of promoting renovation loans. The first thing I want you to do is go on Zillow, Trulia, Redfin, and type in key renovation words: TLC, fixer upper, as is, needs love, right? Find out who's listing those properties, what agents are listing those properties. Reach out to those agents and tell them you'll help move that house. As long as you guys are on the same page about listing it as making it the prospective buyer's dream home, right? The next thing I want you to do is get a list of local contractors and call them up and let them know that now you're a resource for them to help get their clients more funding. Then I want you to reach out to your past purchasers and see if they need a refi, see if they need work done to their home. Maybe their family size has increased since the last time you did their purchase. Maybe it's time for a new pool. Again, improve versus move, and especially on a refi, this is huge. If the after improved value comes in high enough, the borrowers can come to the table with no money down. So why not put on a second edition? As long as the value is there, you might not need to come with any money to the table. All right, so now this is huge. This is the overall process of how a home style works. So first we're going to determine, is it a purchase or refi? Then we'll choose the program. We have other programs here at REMN Wholesale, the 203K Limited, Standard, and the VA Reno. Then we're going to coach our borrower to find a contractor. And it shouldn't be the handyman down the street who does unpermitted, unlicensed work. It should be someone reputable with a license who's insured and experienced. We will ask for references. That contractor will then need to provide us a detailed bid. And in certain circumstances, if we're over $15,000 in work, we're going to ask your borrower to hire a HUD consultant, and we'll get into that in a little bit. And anything that's structural in nature, we'll also ask you to hire a HUD consultant. Then we're going to determine the loan amount. We have an Excel sheet here, which your AE or myself or your AE's assistant can help you with. Basically, we punch in a bunch of numbers and out spits the home style base loan amount. So after the call, if you have a live deal, contact your AE, contact myself, and we will help you out with that. From there, we will coach you on how to put your 3.2 together properly, whether it's in your Calyx Point, your Encompass, or any other LOS system. We'll then run DU and submit the file. And this is very uncommon. We have a 24-hour underwrite, even same-day underwrite in certain circumstances on a renovation loan. So if you submit your file prior to 11 a.m. Eastern Standard Time, we will get you an underwrite that very same day. If not, we will get it to you the next day. So submit your file, get an approval. The next thing you want to do is order the appraisal. So you want to provide your AMC, the contractor's bid. Then your appraiser will go out to the property and he'll have the contractor's bid in hand, and he will determine what that property will be worth in the future once the repairs are completed. Next, we'll clear the conditions and go to closing. So again, you have your non-reno conditions, which you are all already familiar with, and then we have our new reno conditions, which we will help get you up to speed on. That's when you get paid, when the loan closes and funds. And the next part is all us. Post-closing, REMN Wholesale takes over. We have our renovation concierge desk reach out to the borrower, the contractor, the consultant, and get them all on the same page about the draw process. Then the work begins and the draws begin until all the work has been completed. So now let's talk about the roles involved on a Fannie Mae HomeStyle. We have three. We have the contractor. Again, they should be licensed, insured, and experienced. After the call, we will send you a contractor's guide, which is a PDF that contains all the items your contractor will need to provide us: license, insurance, disclosures, etc. Then we have the new party, the HUD consultant. They're an independent third party who works with the borrower and contractor. They really look out for the borrower. They want to make sure that that contractor's bid is feasible. Okay, so they do a feasibility analysis before the loan closes, and they also facilitate the draw inspections once the loan closes. So the loan closes, the contractor goes out and does 20% of the work, and now they want to draw. Well, guess what? They have to call up the HUD consultant. HUD consultant goes and inspects their work. He says it looks good. Once it looks good, we can pay that contractor for the work they did, and then it repeats. If he says it doesn't look good, well, guess what? Now the borrower is protected, and the contractor has to fix their mistakes before they continue. We only really need a HUD consultant on over $15,000 worth of work. Anything under, we consider a simple job, and we don't need a HUD consultant. But again, they are not a bad thing. I would want one if I was doing this deal myself. Anything involving structural work, we also need a HUD consultant. And lastly, we have our REMN draw department, who will work with the contractor and consultant and the borrower to facilitate post-closing draws. So again, after the loan closes, we will place calls out to all parties involved and let them know how the draw process will go. So now let's talk about the math behind a Fannie Mae HomeStyle. First, let's start off with a purchase scenario. Well, on a purchase, the down payment is not just based off of the purchase price. We're taking the purchase price plus the total renovation costs times our max LTV, and that will equal our base loan amount. So in this scenario, we have $100,000 on a purchase price and $50,000 in total renovation costs, for a total cost of $150,000 times our max LTV. Let's call it a 1-unit primary, so we're going to 95% here. Our base loan amount is $142,500, and from there we can determine also our down payment of $7,500. Just to recap, on a renovation HomeStyle loan, our down payment is based not just off of the purchase price, but the purchase price plus total renovation costs. Now let's talk about a refi. So this is huge because on a refi, the borrower has the potential to come to the table with no money, as long as the value comes in high enough. So we're going to take our after improved value times our max LTV to get our base loan amount. In this case, we have $200,000 times our max LTV of 95%, equals $190,000. That's the max we can lend. We have total costs of $100,000 for a payoff, $50,000 for total renovation costs, $10,000 for closing costs, for a total cost of $160K. Because we can lend more than $160K, your borrower can come to the table with no money down. So again, as long as the value comes in high enough, why not build that second floor? Why not put in that pool? As long as the value is coming in high enough, your borrower can come to the table with no money. So when we talk about renovation costs, we are not only considering the number on the contractor's bid. In this case, on our contractor's bid, we have $200,000, but we also have some other fees. The contingency fee is just in case money. So let's say the contractor goes out to start the work, they pull back a wall and they see some other repairs that are necessary to be done. Well, now they have $20,000 in this example as a reserve. If this money is not used, once all the work is completed, the remaining balance will go towards a principal reduction. So it's typically 10%, 15% if the utilities are off, if the plumbing and electric are off, it's an automatic 15%. In this example, they're on and we're doing 10%. We can also finance in permits, architect plans. If you're doing a big job and we need architect plans, it could be a lot of money. We can finance those in. Again, the HUD consultant fee, we can finance that in. So in this example, up front, prior to closing, the borrower is paying the HUD consultant $1,000 to do their initial report. So yes, that is a lot of money to pay up front. However, we can finance that $1,000 into the loan, and as long as the loan closes, we can cut that borrower a check back for that $1,000. So it's really not an out-of-pocket cost at that point. It's being financed. The HUD consultant's draw inspection fees, we can also finance those. And lastly, we can finance in up to 6 months mortgage payments. So again, if the home is uninhabitable during the period of renovations, we can finance in up to 6 months. The HUD consultant would have to tell us how many months it's uninhabitable for, and we can finance in up to that number of months. So in total, on this example, our total renovation costs are not $200,000. Instead, they're $235,000. And again, this is all financeable. So now let's compare the Homestyle to our other popular renovation program, the 203K. Well, the 203K is really only for 1 to 4 unit primaries, whereas the Homestyle not only allows 1 to 4 unit primaries, but also allows for second homes and investment properties, which is huge. You have borrowers out there that want to do fix and flips, fix and holds. They can do it with the Homestyle program. Just has to be 1 unit. And on a 1 unit primary, instead of 96.5%, we can go up to 97% when you stack this program with a Home Ready. And because it's a Fannie Mae conventional loan, we tend to have higher loan limits and we can finance in more. We all know that on standard FHA loans, we have MI for the life of the loan. Well, that's the same for a 203K. Whereas the Homestyle, we have no MI at 80% LTV. And also, I must mention, we offer LPMI. On 203K, you're following the same standard FHA income asset credit guidelines. And we go down to scores of 550 with manual underwrites. Okay? But the pricing might not be as good as a Homestyle with borrowers with higher scores. Homestyle, we're doing per DU, so we do need that approved eligible, and we can't do a manual underwrite. The Homestyle is also more flexible with repairs. The 203K is limited on what it can do, whereas the Homestyle is really all-encompassing, and we can do such things as luxury items, pools, extensive landscaping. You want to build a tennis court? Go ahead, do it. You can do that on a Homestyle. And last but not least, this is very huge on a refi. You need 2 appraisals on a 203K for your borrower to come in with no money. So you need an after improved appraisal and an as-is appraisal. So that's 2 costs. Whereas on a Homestyle, we only need 1 appraisal for a 0 down refi. That's huge. So now let's dig into more specifics on the Homestyle program. There is no minimum repair requirement. That means you can do $2,000, $5,000 worth of work and do a Homestyle loan. There is, however, a cap. We are limited to 75% of the after improved value. So to make numbers simple, let's assume the after improved value is $100,000. We can only do up to $75,000 worth of rental costs. And that's rarely an issue, guys. So I wouldn't worry about that one. Consultant is required, again, on anything that is $15K or more in repairs. The work must be completed within 6 months of closing. So your contractor only has a window of 6 months after closing to complete this work. And again, we can do up to 6 months mortgage payments and roll those in. So now let's talk about some of the eligible renovations you can do with a Homestyle. And I would say you should visit our product guidelines at REMNWholesale.com to get a more extensive list. But keep in mind, we can pretty much do everything. So we can do roofing and siding. We can do foundation work, plumbing and electric. Skipping down a little bit, we can finance in appliances. So you want that, your borrower wants that new refrigerator, that new stove, we can finance that in. Moving to the other side, we can do a new deck. We can install a new patio. We can install a new porch, and we can fix anything structural. So now let's talk about some highlighted items. Something on this page has to jump out to you, and you should say to yourself, I can make a lot of money focusing in on that thing, or multiple items on this page. So let's go over them. High balance loan limits. If you are a broker or an agent in a high cost area, we have high balance loan limits, so we can finance in a lot more. Manufactured homes, we can do those. We can do renovations to manufactured homes. We can build ADUs. If you're in California, I know with the law changes, this is really hot right now for all of my California people out there. Building ADUs is a hot market, and we can build even a detached ADU with a Fannie Mae HomeStyle. We can also build a garage detached, right? So, you know, your borrower's living in a home, he doesn't have a place to put his car. Why not build a garage, right? And again, if the value comes in high enough, he doesn't have to bring any money to the table. Build additional units, add a second floor. Okay, again, going back to your family size increasing. Maybe you need a second floor. You need more room for the additional kids you just had, right? We can also do landscaping, front yard, backyard. Let's add some curb appeal. Solar energy financing, all right? You want to put solar panels on your home? Let's do a Homestyle. You'll be way more competitive than solar financing rates out there. And if you want to pay off solar panels or other energy-related improvements that were done using a PACE or a HERO loan, we can pay those off with a Homestyle. And then we have something really cool. So let's say your borrower or your builder got into some trouble and they ran out of money and they can't come up with the funds to complete new construction, and it's just some finishing touches left. Well, the Fannie Mae HomeStyle, while it does not focus on new construction, can help complete new construction that's 90% complete or greater, right? So that's huge. We can also become the heroes on incomplete projects on homes that already have a CO, right? So we get a lot of scenarios where a borrower thought that they could do a job on a budget and they only get halfway through and they run out of money. Well, what do? They come to REMN Wholesale. They come to you guys. We work on a deal to get them the rest of the financing to complete the job. So we play hero all the time on those deals. Then we can do luxury items. You want to put in a new pool. I know it's summertime and it's the right time to start pitching pools, because you can become super competitive in your market by pitching pools, because the interest rates on a home style are far better than the pool companies. You can also put in crazy stuff like tennis courts, basketball courts. Again, as long as the value's coming in appropriately, we can do them. And lastly, we can do it yourself repairs on a Fannie Mae HomeStyle. It has to make sense. Again, you can't have a dentist who wants to put on a second floor, right? That's not going to work. Let's be smart about it. But if we have a roofer who's our borrower and he wants to put a roof on his house, why not? As long as he has experience doing it, it's a limited scope of work, we can make it happen. So now let's talk about why REMN. Again, we have 24-hour initial underwrites on your approvals, okay? This is uncommon. Nobody does this out there, especially on Reno loans. Experience and volume. We did the #1 volume in wholesale lending for renovation loans in 2018. Support. Everyone here is well versed in renovation loans. This is what we do, guys, right? Our AEs are well versed. Our AEs assistants are well versed. Our help desk, which has an excellent ticket and chat feature, are well versed. I'm well versed, and we have a post-closing renovation concierge desk that will handle all the draws. They're well versed to deal with any issues that may come up post-closing. And lastly, we have superior marketing through our Flyer Paradise platform. All right, so talk to your AE after this call and get set up with Flyer Paradise. You have to be approved with us, and you can brand your own home style flyers. We can put your name, logo, information on it, and you can send out to your agents, and we can start getting these deals in. So now let's talk about your very first home style deal. I don't want to bog you down with the nitty-gritty details because you'll have paralysis. What I want you to do is get simple facts, simple information, call your AE to discuss, call myself. We will handhold you through the first deal or two until you get accustomed to doing these, right? We don't want to go over all the details now. We just want you to sell. We just want you to sell, get the deal, get a few pieces of information, and we will help you out the rest of the way. The first piece of information I want you to get, and we're talking about a borrower who now knows that this is going to be a renovation loan. Maybe the appraisal came back and you have a list of items of what we need to do, or maybe it's improvements to a home that the borrower wants. Either way, let's get a ballpark idea of what work is to be done. Is it structural? Is it just cosmetic? What is it? Then let's get an estimated dollar amount. Is it simply a borrower's estimate? Yeah, I think I want to do like 20 grand worth of work. Or is it from a tangible bid that the contractor put together? We can have either, right? And lastly, I want you to get an estimated after improved value. So if this is a purchase, go to the real estate agent, work on comps. The comps need to be for homes similar to the home we're doing with like improvements, right? Then I want you to call your AE to discuss. We'll walk you through the max mortgage worksheet. We'll walk you through all the rental conditions. We'll handhold you the rest of the way. And at this point, I'd like to thank you all for joining today's webinar. If anything pops into your mind, you have scenario questions, want to get set up with Flyer Paradise, you need a contractors list for contractors in your area, you want to set up a one-on-one follow-up or a team training, need submission help, or you're not signed up and you need an AE, or if you simply just have some feedback, please shoot us an email at webinars@remn.com, and we will make sure to take care of all of you after the call. And lastly, please connect with me on LinkedIn. My name is Steve Rosetta. All day, every day, I'm posting news, updates, and sales tips on renovation loans. So please do not forget to connect with me. And with all that being said, I wish you guys good luck on getting your first home style deal, and I hope you have a great day.